Good morning, everyone. Welcome back to another episode of Tech Bites with Poonam. Today, I have a very special guest here in the studio. He's the president of the U.S.-India Chamber of Commerce in Dallas, Texas. As an executive advisor, a strategist, and consultant, he brings decades of experience helping businesses grow and succeed across the Dallas-Fort Worth area and beyond. He specializes in leadership development, business growth, and building long-term strategic relationships that empower the executives and entrepreneurs to achieve the long-lasting success. He's deeply committed to community service and civic engagement. He serves on the library board for the City of Carrollton, the Steering Council for Hunger Mitayo, and the Board of Directors for the World Affairs Council of DFW, where he supports efforts to expand the global awareness and dialogue in the region. He's also the author for You From Me, and a prolific blogger, having authored over 1,000 posts and focused on the personal development, leadership, and purpose-driven work. He holds a bachelor's degree in interdisciplinary studies from the University of North Texas and an MBA in global leadership from the University of Texas in Dallas. Ladies and gentlemen, please welcome Raj Daniels.
Good morning.
Good morning, Raj.
Thank you for having me. I really appreciate it.
You're most welcome. So tell us a little bit about yourself, other than the introduction that I did.
Father of 3 daughters.
Okay, that I missed.
Absolutely. That's probably the most strongest guiding light in my life right now.
Definitely.
I see my life as a full representation of them. Mm-hmm. And a lot of what I do aligns around how I want to see our life play out to the best of my ability with them. So That would be my number one, father of 3 daughters.
So tell us a little bit about the U.S. and India Chamber. What does your day-to-day look like?
Sure.
What do you handle every day?
So the chamber operates like most chambers. Mm-hmm. We have 3 pillars, essentially. We do, some business referrals. Mm-hmm. We do networking events. So we try to bring people together as much as possible. Okay. Over the course of a year, we probably bring together over about 2,000 people through different events. And then the last piece is community advocacy, community impact, essentially. So these are the 3 pillars that we operate around. Now, ours is slightly more unique because we have the country of India from that perspective. And so we also have businesses in India that are looking to set up a foothold in the U.S., preferably North Texas. Right. And also vice versa. Right now, there's a lot of conversations, especially with India being so elevated on the global stage, around potential opportunities for businesses here in the North Texas area to set up offices in India, specifically, manufacturing, technology, et cetera.
So is it more of an IT related? Or
no, okay. We sorry to interrupt. We do have a strong IT contingency, okay. But we have restaurants, we have IT firms, we have accounting firms. Mm-hmm. We also have large enterprises like, Southwest Airlines is a member, DFW Airport is a member, so Coca-Cola bottling. So we range all the way from what we call, small entrepreneurial endeavors, mm-hmm. all the way through to enterprises.
Mm-hmm. And I remember I went to the Women Leadership Conference that happened. I think that was really elaborative. That was really nice. So does that happen every year?
So the Women's Conference, I think we had our 10th annual Women's Conference this year. I think it was 10th. Okay. I've been with the Chamber, in full transparency since last October. Okay. So a lot of this is new to me. Right. But from what I heard, this Women's Conference that we had in February 28th, was amazing. I mean, it was sold out beyond capacity. I think we had 450 people. Right. We had people trying to register the last day too. So, we had Kay Bailey Hutchinson as our keynote speaker. Right. So it was a tremendous event, and it was an honor for me to be a part of that.
I agree. I understand. I think that's when I joined too, and that was my first event with the
US. Thank you so much. I really appreciate that, and I hope I'll see you at more events.
Yes, I will be joining. Yes. So for the folks who are in the DFW area, mm-hmm. the new businesses, whether the startups or the business that have already been established. Mm-hmm. So what are some of the common mistakes or the surprises that you see and you kind of, that they do or they want to, come into the chamber? And what's their main term goal? What they do want to achieve, like mostly?
So one of the things I tell my kids is that the answer to most questions is it depends.
Right.
You have, like you mentioned, startups, which are on one end of the spectrum, and you have very mature businesses on the other end. Right. Whenever you get inside a business, be it a small business, I mean, you probably say from the tech side, or a large business, mm-hmm. fundamentally at the core, they're all doing the same thing, right? Yes. They're selling a product or a service. Yes. How they go about doing it may be varied, but, we're seeing a very and I'm going to go off on a tangent here intentionally, we're seeing a changing landscape right now, especially with artificial intelligence.
That's true.
So right now you're seeing a very, very small team being able to utilize artificial intelligence to perhaps leverage their capabilities. And then you're seeing enterprises on the other end of the spectrum, perhaps using artificial intelligence to, say politely, efficiency. Now, what does efficiency mean?
Yeah.
Right? Maybe to reduce headcount.
Right.
So right now, this time that we're in, and it's been accelerating since, Q1 of 2023 when ChatGPT was first released through till today.
Right.
And so it's hard to answer that question with one specific answer. I can give a couple of very specific answers for both ends. When it comes to smaller businesses, perhaps startups, let's talk about that.
Right.
There's a adage in the startup or entrepreneurial community that a first-time founder focuses on product or service,
Right.
and a second-time founder focuses on distribution.
Yes.
And what I mean by that is that, sometimes I come across a tech genius who's trying to build a product
Right.
and has a mindset of, if I build it, they will come,
Right.
which rarely happens.
Right.
A second-time founder will build the market first, so when the product is ready, they have a market for it. On the other end of the spectrum, when you're talking to people within enterprise, I've heard from two enterprises in the last couple of weeks, specifically in the financial sector, that I wish our management would allow us to use or adopt artificial intelligence faster. Now, I understand from the management, the governance around it and the data privacy around it, they have a lot of challenges, so they can't adopt as fast as they would like to.
Right.
And some of these entrenched individuals within the organization are seeing smaller players eat away at their market share because they're able to adopt technology quicker.
Correct. So change is the only constant.
I mean,
Correct.
it always has been, right?
So it's not more so who is replacing who, it's more so who is able to change and kind of go with
adaptation.
Yes.
The Darwin quote often goes, it's not the fittest, it's the fastest to adapt.
It's true.
And so those that can adapt and also allow innovation within their organizations
Right.
and not fear the innovation, I see a lot of that. And I was just thinking 2 days ago that, look where Amazon's come in 40 years.
Yes. Yes.
Right? Walmart's been around for almost 80 years, twice as long as Amazon.
Right.
And you're seeing a lot more players like this, eat away at market share. Look at what TikTok is doing to Facebook, right? So you're seeing these smaller, innovative platforms,
Right.
and then you see the legacy players trying to play catch up.
Right. Right. And I see in my clients also for the tax planning, they're like, okay, we got all this from the ChatGPT, but we have all the data, but we're not able to understand it. So I just feel like I think the tax planners are still in demand just to justify what they have read. So I'm hoping that as long as we are able to adapt to that and kind of bring it to the point where we are doing our job to that integration, I think that should go hand in hand.
Well, along those lines, many people that I see or talk to that are using one of these platforms, it could be Chat or Gemini or whichever platform, they usually use them for one or two iterations. And what I mean by that is that they may ask it a question,
Right.
and they may follow up with another question.
Right.
I challenge them to spend 10 to 20 minutes on one platform having a conversation.
Yeah.
Because what you'll find very quickly is that it'll begin to, whether you call it hallucination or regurgitation, it'll lose track of the conversation very quickly.
Yeah.
And that's where I say that this is where you find the weakness in the platform. And that's why I feel like, a profession like yours, when people realize the limitations of that,
Right.
or perhaps the incorrectness of that.
Yes.
I had a good friend of mine who was the general counsel for Mr. Cooper a long time ago, but he was an attorney in another field. And he would say to me, Raj, my best clients are the ones that I said, it's going to cost you $3,000 to set up an LLC. And they go away and they use LegalZoom. And they come back to me 3 years later because they realize they've screwed up
big
so
time.
much of it. Whether it's not accounting for meeting minutes, whether it's the operating agreement, whatever that might look like. So I think for someone like you in your field and your peers, that's where the value is going to come in.
Right.
You can tell people, use a LegalZoom or use a QuickBooks or use whatever online platform you want to,
Right.
Use whatever online platform you choose to. But here's what I've seen or where I've seen go wrong.
Right.
There's that adage, human in the loop.
Yeah.
You are going to be the human in the loop.
Right. That's true. That's true. Yeah. So, are there any trends or topics that you kind of hear a lot about with the businesses that you work?
The two biggest topics, maybe three this year, are tariffs.
Yes,
It's
definitely.
the elephant in the room, the tariffs.
Yes.
Many of our business leaders that we're speaking to, from the chamber's perspective, we get this wide lens. Like I said, we may talk to a restaurateur one day, an IT professional the same day, and someone that's running an import business, so we get this entire landscape.
Right.
And so tariffs have been this elephant in the room since, beginning of this year.
Right.
It's made the entire year unpredictable. I don't think many people really comprehend.
Or even understand,
Right.
I guess. Yeah.
When a CEO or when a CFO can't plan, can't forecast.
Yes.
I think it makes it very challenging. So tariffs is one. And then from a technology perspective, we touched on AI and the changes it's making there. And the third, and perhaps not talked about openly, is immigration.
Yes. Yes.
You may see it, but I can tell you that we have members that are saying things like, I'm finding it difficult to find labor. The price of labor is going up. And, all these issues trickle down to the consumer.
Right.
So there's direct and indirect.
Right.
But our members are telling us that people, are afraid to come out to work. I talked to a home builder last week. He's almost had to increase the wages he's paying by 1/3 to 2/3.
Wow.
And he has to absorb that margin.
That's true. Yeah. And then how about the H-1Bs and all that? That's also getting affected, right?
Absolutely. Yes. Absolutely. Some of our IT firms that are our members have told us that they've seen a significant slowdown in business. The number of applications has dropped, I think, by 20 or 30%.
30%, correct.
We did a immigration webinar yesterday at the chamber, and some of the questions were being asked around that specifically. And also the thing I didn't realize, and you may know this, filing fees have gone up.
Yes, they have.
Filing fees have increased by 30% to 100%.
Yes.
So now, how does the employer account for that in their P&L going forward?
Correct. And the skills that you may need, you're like, okay, you're able to maybe hire somebody else who you do not have to, sponsor the H-1B, and you just have to kind of justify that much of an expense that you're putting in.
Right. So people's business models are changing, which is okay if they could use that to forecast perhaps Q2, Q3, Q4, but Q2 is almost over, but they can't.
They can't.
They don't know what the next tariff bump is going to be, the next immigration question is going to be.
Right.
So there's a lot of uncertainty.
Yes, and layoffs are happening too.
Correct.
Especially in the IT industry.
Right.
Yes. So along these lines of working with the businesses, so what is the one most practical advice that you kind of end up giving to everybody who is...
I lean more towards soft skills and analytical skills. I believe soft skills are the foundation for a lot of what needs to be done in leadership positions. And I've spoken to, in the last 5-7 years, hundreds of CEOs or C-level executives, other work that I've done. And I tell them, find a CEO support group.
Yes.
Find an executive support group. Find someone you can talk to. And that may sound, like touchy-feely, but it's true that it's lonely on the top. It's true that people don't understand what a leader is going through in his or her position.
That is so true.
On a daily basis.
That's so true.
I mean, including family. Family doesn't understand, right? Family occupies another crevice in your brain that work doesn't.
Yes.
But no one truly understands. And so I'm not saying everyone needs a therapist by any means. I'm just saying someone that perhaps can, even if they can't give you words of advice, can actually just listen and maybe then give you some perspective on, I tell everyone, look, nobody has it figured out.
Right. Yeah. I think managing people is the most difficult thing rather than managing business in itself,
People is business, right?
That's true.
True. Without people, there is no business, right?
Yeah.
And I think, and across, specifically when it comes to managing people, managing across different, generations, perhaps you see different challenges with different generations, different opportunities with different generations. So that is, a difficult part. But I think, and again, when we had our tech event 2 weeks ago, we had Curtis Haidt there, and he was talking about conscious capitalism, leading with empathy. And I'm a big believer in that.
Right.
I'm a big believer that, you can help people through a journey at a place of employment, or you can help people realize that this might not be the right fit for them and help them on with that journey. And I tell my kids all the time that be kind to everyone, especially on the way up, because you'll probably pass them on the way down.
That's so true. That's so true. Yes. So what's something that you would think that people would understand more doing business between US and India? Like, how do you help out if they have a base in India and they want to, set their foot here versus...
So I'll give you a perfect example. I received an introduction 3 weeks ago. A friend of mine here knows an IT firm in India, and they want to set up a toehold here in the US. And what I did, I recommended that they speak to 2 people in our chamber network, 2 different companies, one specializing in logistics and one in manufacturing. And the reason I chose these 2 individuals is because this company has a very strong customer base in those 2 verticals in India and globally too. But I made an introduction and said, look, if you're deciding to set up a foothold or toehold here, speak to these 2 trusted people that we know in the chamber. They're both experts in these particular verticals. Have that conversation, and maybe there's an opportunity from a partnership perspective. Business is all about de-risking.
That's true.
Right? So how do you de-risk your next move, right? Or what's the probability of success? I tell my girls again, you hear me say this a lot. Look, 51% means you're trending upwards, 49% you're trending downwards, right? So how do you de-risk to where you say 51%? Okay, so I made this introduction. They both had calls, and I think they're going to pursue, a very low risk contract with these individuals, where these individuals can perhaps be on the ground for them. And this is a live case that happened 3 weeks ago, and I hopefully it's going to come to fruition, so I can report back on that.
Awesome.
And vice versa, I would say the same thing.
Right.
I met with a gentleman on Monday. It's a small consulting firm, 50-person consulting firm. They do work in OEMs, automotive, specifically telematics and data off vehicles. And he's going to Mumbai in August or September. And he said, look, I'm going to Mumbai. I'm going to meet these people in Pune. Do you have any other people that you can introduce me to? And I said, absolutely. People in our network that we trust, that have a presence over there.
Right.
We make your trip more productive.
Right.
And so the same thing there. They're looking to perhaps set up a GCC in India or set up a back office in India. We can make that similar introduction. We're trying to de-risk their opportunity, trying to de-risk their decision to make set up an office there.
Office in India.
Right.
Awesome. Because it's always very scary to go the place that you don't know.
Absolutely.
And if you find that, people that you know and you can trust, I think it becomes very easy.
Right.
Especially, to start with. So last but not the least, let's talk about your blog, rajdaniels.com. So my daughter and we were reading yesterday. She read a whole lot about it.
Very kind of her. Your daughter's amazing, by the way. I watched her interview with Jeff. I mean, I told you before we recorded, I would not imagine she was 10 years old, especially with that vocabulary. It's amazing.
Thank you. Thank you.
The blog was what I call dancing in public. I'd been advising entrepreneurs, executives for many years. In 2014, I think it was, 2015.
Yes, 2014, yeah.
A couple of people said, we really appreciate the advice and things you tell us. Have you ever considered writing these things down? And I had to sit down and take my own medicine and said, what's my hesitation? What's my resistance?
Yeah.
And so I set a very small goal for myself. In retrospect, it doesn't sound small, sounds stupid. But it's wake up in the morning, meditate, let's just start writing. And my goal was, Raj, look, you only have to write 100 words. That's it. And you can just write blah, blah, blah 100 times and walk away. But I wanted to get that muscle going.
Right.
So I started writing in 2015, January, 3 times a day, whatever came to mind. And I got the muscle going. And I had written continuously for 2015, 2016, 2017.
So did you ever have to go back and kind of double check, or did I pour my heart out a little bit more? Do I have to restrain? Did you have to ever check yourself?
So there's 2 books. One is called The War of Art, and by Stephen Pressfield, and another one followed by Seth Godin, who writes a lot about this. And he's written, I think, 8,000 or 10,000 blog posts. But artists always see fault in their work. Even if you edit this podcast, you feel like, what should I have done
different?
Right.
Yes.
Or And I just wanted to get it out into the world because I knew if I sat there, and also I had a hard stop because my girls wake up at 6:30 to go to school. So I have to write between 5 a.m. and 6:30 and had to be published by 6:30 and done in the world.
Wow.
That's it.
That's good.
And
That's great
I knew if I didn't hold myself to that commitment,
you won't be able to
I wouldn't.
later. Yeah.
But the momentum fortunately helped. And, by 2017, I had written, I don't know, several hundred. And then 2017, people that were following the blog said, we like what you're writing. Have you considered publishing these in a book? And again, I had to question myself. I said, it's that, am I valid? Should I be? Who am I? That conversation in my head. Who am I to be, publishing a book?
Right.
But then I did that, and that led to speaking engagements with the book and book signings, and it just took a life of its own.
Nice.
And so now we're at over 1,000 blog posts.
Yeah, it was wonderful talking to you, and it just felt like we were just talking. I just didn't feel any.
I want to say publicly, I am super proud of you for doing this.
Oh, thank you.
Stepping outside the box, doing something different, doing something creative from the industry perspective. I mean, you should be proud. Your daughter hopefully is super proud that her mom is doing this. So
thank you.
Thank you for having me, and I really appreciate all the questions.
Thank you, Raj. Thank you for coming.
Thank you so much. Appreciate it.
Sure. Okay, welcome back, you guys, in the next segment where I discuss tax topics. So that was a great interview with Raj Daniels. This is my first slide. My company meets under CPAs, and then today I'm going to be discussing what it takes to be an S Corp and what goes into the S Corp when we are handling the income and the losses and the stock and the debt basis of the S Corporation. Next slide. Okay. So what is an S corporation? So like I discussed to begin with, we have a sole proprietorship. We have an LLC, which is a single member or a multi-member, making it a Schedule C single member LLC or a multi-member that can actually be a 1065, which is a partnership. Or then you have a corporation, which is with an Inc. So when lots of people or lots of my clients come to me, they're like, we want to form an S Corp. So technically, the question then comes on to you is whether you want to form a corporation and then convert that to an S Corp, or you want to have it to be an LLC and then convert that to an S Corp. Now, having said that, conversion means you really cannot form an S Corp directly. You have to have a route of either an LLC or a corporation. Then once that is done on any state level, be it a state of Texas, state of California, whatnot, you do the formation. And then on the IRS side, when you're getting that EIN number established and everything and what kind of business structure you want, that is where you'll have to kind of file certain forms to make it an S Corp. And it could be you can go whether you're forming the LLC or the corporation in the middle of the year, where it's like May, June, you can go retrospective and start it from January 1st of that particular year. Or you can even go one behind the last year, provided you have a valid reason to do so. So today I'm going to discuss some S Corp basis, the benefits of doing an S Corp, the eligibility portion of it, and why the stock basis and the debt basis matter for shareholders is very important. Next slide. What is stock basis? So what happens is every now and then my clients are like, I want to form an S Corp because it's good and that's what I've heard. And then provided that, okay, so I ask them, what are you trying to achieve with an S Corp? Well, I feel that I can just take money out. Okay, and it's not taxable. So what they're trying to tell me is that they can take out the distributions, and distributions are not taxable, which is correct. Yes, they are not taxable, but you have to give yourself a reasonable salary. That is the number one rule for being an S Corp. As long as you're making a profit, as long as you have a net income, you as a shareholder have to give yourself a reasonable salary. Now, what is a reasonable salary? Reasonable salary can be reasonable for each one of you. Okay, one shareholder could have a different reasonable salary versus the other could have a different reasonable salary. So it depends upon your business, what kind of reasonable salary that you want to set up for yourself. So the S Corp would have the reasonable salary given to the shareholders or any other employees that you might have. And then you would have the shareholder distributions, which is separate for the LLC. Now, what are those distributions? So distributions is something that you can take out but not in excess of basis. Now, wait a minute. What is basis? Okay, how do we know if we go excess of basis or not? That's where the tax professionals, that's where the CPAs come. That's where the accountants come and do their job. Now, what increases the stock basis? Any capital contributions, capital as in the shareholder contributions, that they put the money into the business. Those are the capital contributions. The net income that the S Corp is making every year, that increases the stock basis. And what decreases the stock basis? The distribution that we just talked about, the money that the shareholder is taking out. The net loss that the business has, and any non-deductible expenses. What is example of non-deductible expenses? Recently, for example, entertainment. That's not deductible. Let's go to the next slide. Okay. What is a debt basis? We just discussed the stock basis. Now let's discuss the debt basis. So loans shareholders make to the S Corp. So if you have opened a corporation and you converted that in S Corp, any loans that you took over, that kind of increases your debt basis because you're putting money into the corporation. You're putting money into your S Corp. You're bringing in that money and increasing the basis of the S Corp. Why it matters is because losses can be deducted beyond the stock basis if the debt basis exists. And the loans should be bona fide, meaning it should actually be a loan. You cannot just be like, took money and just put it there. It has to be a specific loan where you're putting an interest expense. It should be bona fide. It should be legit. Okay. Now, let's go back to that line which says why it matters, because losses can be deducted beyond the stock basis if the debt basis exists. Now, what does that mean? So, for example, you started out the business and you're like, okay, I made it an S Corp and I put in $50,000 as my stock basis. Sorry, I put in as an initial contribution. So you started out your basis with the $50,000, that the money that you put in. Then your business made another $20,000. So you had a beginning stock basis plus the net income, $50,000 plus the $20,000 minus you took out maybe another $10,000 as a distribution. 50 plus 20 is 70, minus 10 is 60, but you brought in another 50,000 as a loan. So you have a basis of 110,000. Okay. Now, if you want to take the distributions out, if you want to take some money out with the salary and the distributions, you cannot take more than 110,000 out from the S Corp. It has to be within the basis. If you go beyond the basis, it's going to be in excess of basis, and you will end up paying capital gain tax on your personal tax return. Because remember, it's a pass-through. You'll get a K1. The distributions will be lying on the K1 on 16D, and that will be pulled over onto the Schedule D of the personal tax return 1040, and you will end up paying a capital gain, probably the long-term, short-term, anywhere between 15 to 20% on the personal side of it. So in order to maintain that, what IRS recommends and what we have been doing as CPAs is that we have to have a shareholder basis worksheet attached to the K1. When that worksheet is attached to the K1, we have to make sure that we have tracking the basis, the beginning basis. You remember the stock basis that you put in the capital contributions plus the net income minus the distributions minus any losses that you have, or plus the debt basis where you put in the loans. All that is tracked, and that goes into your personal tax return on Form 7203, so that you're tracking the basis, so that any distributions that you take out, they are recorded there and you stay within the basis. Now, lots of the questions come in from my clients is like, oh, we didn't know that, and we took lots of shareholder basis. How do you go by doing that? For that, you have to come to a tax professional or a CPA, and we can help at MISA and the CPAs, where we can tell you how we deal with that for you not to have a tax paid as a capital gain, but we kind of categorize it in a way that you can actually pay it back, the distributions, plus with no tax paid on it. So that's something which we can elaborately talk about once you can make a one-to-one appointment with us. Next slide. How to adjust the stock and debt basis. So stock basis adjustments, like I talked about, increases and decreases. Increases capital contributions and net income, decreases, non-deductible expenses and the distributions. Debt basis adjustments is loans made, like I talked, bona fide loans payments. Now, importance of accurate tracking each year. Like I discussed, there has to be a shareholder basis worksheet, which is tracking the beginning stock basis and the ending stock basis, and the ending stock basis becomes the beginning stock basis for the next year. Next slide. ordering rules are very important. So here I'm just discussing why ordering matters, because it affects the taxability and deductibility. So step by step, meaning like I said, it has to be the capital contributions, and then your net income comes, then the distributions, then any non-deductible expenses like entertainment, and then any net losses. So that continuity has to be there on the shareholder basis worksheet in order for you to have the correct basis carried forward onto the personal tax return of a 1040 Form 7203. Next slide. The real life example. I'm just giving you a little bit of example here, saying simple scenario. You have the initial stock, which is your initial contribution, plus any loans that you took. Remember, I gave you a bona fide loans with a debt basis, plus any of your yearly income, which is the net income from gross minus expenses, and then any distributions you take out. Then you have losses, and then any new loans that you're bringing in. So that is a simple scenario. Now, show how stock and debt basis change year to year. Obviously, you have to maintain the shareholder basis worksheet where you're showing the beginning and the ending, and the ending becomes beginning, and then it goes and then flows through. Okay. What are we going to take away from this presentation, basically, that I talked about the S-Corp basis? First of all, always track the basis annually. It's very important. If you are an S-Corp, your CPA is supposed to give you a shareholder basis worksheet with a K1. That is very important, because that K1 goes on to your personal tax return, and that shareholder basis worksheet also goes to the personal tax return 1040 on the Form 7203. Use Form 7203 for calculations. That's exactly what I've been talking about in this presentation, that you have to track your basis and put in your beginning and ending and make sure that's matching. The 7203 should be matching with your shareholder basis worksheet. You should always consult a tax professional for complex situations. I do not recommend anybody doing an S-Corp tax return on TurboTax. Frankly, no. That's a big no. Because I really want you guys to be tracking the basis. It's very important. And most of the times they are missed, and then they get a notice, and then they come to the tax professional, and we handle that doing the amended returns going back. Because remember, when we are amending the S-Corp, because it's a pass-through and a K1, your personals are going to be amended also. And obviously, you can go to irs.gov for the further reading on this concept. And that is all from me today. You can see my website here, www.misandhucpas.com. That's my email address, psandhu@misandhucpas.com. You can reach back to us at 972-840-2000, my extension 1002. And this podcast will be telecasted on the YouTube at Tax Bites with Poonam. And now that is all from me today. I hope you guys enjoyed the session today, and I'll be back with another episode maybe next month. Thank you so much.